stock market and global market news. Global markets fell as oil prices jumped again. Global markets, stock markets in Europe and Asia turned weak today because fears grew that the Iran-US ceasefire may not hold. Oil moved back towards $100 per barrel, and investors got worried that higher energy price would push inflation up again. Investors are watching inflation and central banks closely. After the recent market rally, traders are now focusing on whether rising oil will force central banks like the US Federal Reserve and others to stay strict on interest rates. This made global shares more volatile today, especially in sectors like banking, traveling, and technology. Now let's move on to Indian market news. Sensex and Nifty fell sharply today. The Indian market ended lower after a strong rally yesterday. Sensex closed down 931 points at 76,631.65 and Nifty 50 fell 222 points to 23,775.10 as the investor become nervous again over global tensions and rising crude oil prices. Middle East tensions hurt market sentiment. Fresh worries over the US-Iran ceasefire pushed oil prices higher and that created pressure on Indian shares. Banking and financial stocks were among the biggest losers today. Rupee weakened against the US dollar. The Indian rupee split to 92.6575 per dollar, showing pressure from higher oil prices and weak foreign investor mood. This is important because a weaker rupee can affect import goods, fuel, and investor confidence. Broader market was stronger than headline indices. Even the Sensex and Nifty fell. Mid-cap and small-cap stocks stayed slightly positive. That means investors were still buying selected smaller companies despite weakness in big stocks. Morgan Stanley gave a bullish long-term target in a positive surprise. Morgan Stanley said Sensex could reach 95,000 in 9 months, which suggested about 24% upside from current levels. If market conditions improve, this is one of the biggest bullish call in Indian market news. Now let's move on to political market news. RBI kept repo rates unchanged, important for banking and market. The Reserve Bank of India kept the repo rate at 5.25% and maintained a neutral policy. This is political and economic news because government growth expectations, inflation control, and borrowing cost all affects the stock market, especially banks and NBFCs, real estates, and rate-sensitive shares. India's steel and industrial policy push is supporting sector sentiment. India is aiming to cut steel accessions by 25% and double steel capacity over the next decade. According to a government-linked policy document, this is important for the market because it can affect steel companies, infrastructure costs, stocks, mining, energy, and capital goods shares. So that's it for today, guys. If you have liked my video, please like it, share it, and subscribe it. Thanks for watching FBR channel. Allah Hafiz. See you guys in next video.